Hello, good to have you on the program again. Of course, it still remains the economy today. And the station still is Kaftan Television. We hope to bring things that will help, as we always want to mention here, to ensure that there will be a kind of a review, a preview, an interview, and the news itself on the program. Business news, of course, on the program, The Economy Today. Okechukwu Onubogu here. And the aim of this is to ensure that there is something you take home out of what we bring you on a daily basis. And that's on this program. The thing that will enable the economy in your own home and your own life to be made better. Welcome again. I have segments that we would always want to bring forth on the program, talking about the news bits, talking about from the business news, as well as the stock exchange. And this day will not be different. We'll still bring these to let you have it the way it is. And so right away, I would also want to let you know that there's a topic of discussion today, and that topic of discussion has to do with the stability of the Naira. The stability of the Naira. And we want to look at the supporting indices. And so these are the things that you get to hear us talk about as we go on the program. But before we do all these, I want to say, let's begin with one of the things we have here, talking about from the business news.
The Nigerian National Petroleum Company, NNPC Limited, in partnership with the Total Energy Sectoral Consortium, has executed a production sharing contract, PSC, for petroleum prospecting licenses 2000 and 2001. The event took place at the Nigerian Upstream Petroleum Regulatory Commission headquarters in Abuja. Group Chief Executive Officer of NNPC Limited, Engineer Bashir Bayo Ojulari, noted that the event represents the first of its kind, with high-impact prospects that will improve energy security and drive Nigeria's economic growth. He highlighted the ceremony as a powerful testament to the success of the Petroleum Industry Act 2021 and a clear signal to the global investment community that Nigeria is indeed poised for business. Engineer Ojulari also emphasized NNPC Limited's commitment to leveraging such partnership and expertise in deepening upstream operations to surpass the successes achieved in previous deepwater projects while applying cutting-edge technology and high operational standards to ensure commercial viability and sustainability. In his remarks, Engineer Gbenga Komolafe said the award of the two offshore blocks, spanning about 2,000 square kilometers, is a direct product of transparent, competitive and reform-driven framework introduced under the Petroleum Industry Act 2021. He also commended NNPC Limited and the contractors Total Energies and Septra for their commitment to exploration and production activities in the country, citing success in previous assets such as Egina and Akpo. Still on business, the Director General of the Securities and Exchange Commission, Imomotimi Agama, has cautioned Nigerians to beware of online platforms promising unrealistic financial returns. Agama stressed that registration with the Commission is a key marker of legitimacy for any investment scheme. The said DG added that many fraudulent schemes lure victims with promises of outrageous profits, noting that the Commission has issued more than 85 advisories against such illegal operators. Agama also cited Section 3, Subsection A of the Investment and Securities Act 2025, which empowers the Securities and Exchange Commission to regulate businesses in Nigeria's capital market, while urging Nigerians to contact the Commission's offices in Abuja, Lagos, Kano, and Port Harcourt. And on par, the Bureau of Public Enterprises, BPE, is set to list two electricity distribution companies, DISCOs, and one generation company, GENCO, for the initial public offer in the Nigeria Stock Exchange market. Director General Mr. Ayodeji Guleyi announced this at a briefing in Abuja. He also revealed that shareholders' loan agreements were recently executed for 10 out of 11 DISCOs. According to him, the disbursement of the loan will begin any moment from now. He also said that the GENCOs are yet to key into the eligible customer regulation because of transmission challenges. On illicit financing, civic organization Connected Development has urged leaders at all levels to embrace transparency and accountability while announcing that its flagship initiative, Follow the Money, has tracked over 400 billion naira in public funds across Nigeria and other African countries towards helping citizens recover vital resources for communities. The chief executive of CODE, Hamzat Lawal, while inaugurating new leadership, said the milestone demonstrated the power of citizen-led advocacy and ensuring that government spending translates into schools, health centers, water projects, and essential services. He also stated that the next phase of organization's work will scale up citizen oversight, deepen advocacy in education, health, and gender equality, as well as build a new generation of youth leaders across the continent. Lawal, who was recently awarded the Chevening Scholarship to study governance, development, and public policy at the University of Sussex, announced a new leadership for CODE to ensure continuity.
Yeah, that was from the business news, and even as we've taken that, we'll still go further to look at something else that we have also with us. That's talking about the fact that we also have our stories that the ones we refer to as our news beats. There's things that have to do one way or the other with commercial economy and all that. So let's look and see the three stories we have in this. There are things that will help, especially as there's one that has to do with the GENCOs and DISCOs. There are others. Well, just watch and see the things we have from our news beats.
The Bureau of Public Enterprises, PPE, has announced plans to list 2 electricity distribution companies, DISCOs, and one generation company, GENCO, on the Nigerian exchange as part of measures to strengthen the power sector and attract fresh capital for improved performance. Director General of the Bureau, Mr. Ayodeji Beleyi, disclosed this in Abuja, noting that the move is in line with the National Council on Privatization (NCP) strategy to boost private sector participation and support the federal government's ambition of building a $1 trillion economy by 2030. Beleyi revealed that the BPE had already secured NCP's approval for landmark transactions, including the secondary sale of WPG's 60% equity in Eco-Disco to MSP Consortium, as well as the divestment of Amcon and lenders' 60% stake in Ibadan Disco to Arclight Consortium. On dispute resolution in the sector, the DG said the Bureau had initiated talks with the Office of the Attorney General of the Federation, Ministry of Justice, and other stakeholders to address long-standing issues, including Sapele Power Plant cases involving 850 megawatt capacity. Providing updates on the Bureau's activities, Beleyi stated that since inception up to 2023, the BPE has completed 243 transactions across various sectors, ranging from asset sales, concessions, and public offers to debt equity swaps and liquidations. He stressed that the Bureau is now shifting focus to strategic projects designed to stabilize the economy, generate jobs, and enhance infrastructure. For 2025, the BPE is targeting 312.3 billion naira in privatization revenue through 15 projects spanning power, agriculture, energy, and infrastructure. These include the restructuring and recapitalization of the Bank of Agriculture, commercialization of the Nigeria Agricultural Insurance Corporation, completion of power projects such as AFAM 3, Fast Power, and concessions of airports, road corridors, and free trade zones. Fuel marketers are currently in a fierce battle for the control of the largest share of the downstream petroleum market. The battle among oil marketers, including major players and independents, is driven by the deregulation of the downstream sector and the influx of locally refined products from Dangote refinery. The price war and competition have led to price reduction at filling stations, but also threatens the survival of smaller marketers, with over 70% of some independent outlets closing shop due to unsustainable operating conditions. The situation highlights ongoing struggles for market dominance between the Dangote refinery, NNPC Limited, and traditional fuel importers as they navigate pricing, logistics, and regulatory challenges. Some depots, including Dangote Refinery, were selling premium motor spirits, also called petrol, at 821 naira per litre. The depots are Hayden Integrated, 11 PLC, ITEL, and Sahara. Others are MRS Tinkan, Bovas, and Dangote Refinery. Rain Oil and Nipco topped the market at 850 naira per litre, followed by Prudent. Ora O'Hara, Matrix Worry, Sigmund, and Solomon at 840 per litre. At the pumps, Adova Petroleum was selling at 845 naira per litre as against 865 naira per litre pump price by NNPC, 11 PLC, MRS, and Total Energies. The price drop by the marketers may not be unconnected with the plans by the Dangote refinery to disrupt the petroleum downstream market over its recent announcement to begin the direct supply of petroleum products with free logistics to petrol station operators, manufacturers, telecommunications companies, the aviation sector, and other large-scale users. Dangote Petroleum Refinery is in an earlier update on the scheme said only 450 trucks out of the 4,000 CNG trucks had arrived due to logistics challenges in China. British International Investment (BII), United Kingdom's development finance institution and impact investor, has invested more than $120 million to strengthen Nigeria's agricultural sector, boost food security, and build climate resilience. The latest commitment is a $7.5 million debt investment in Babangona, an agri-tech social enterprise that operates an agricultural franchise model for smallholder farmers in northern Nigeria. The funding is aimed at addressing barriers faced by farmers, including limited access to finance, poor availability of quality inputs, and growing vulnerability to climate risks. Speaking at the signing in Lagos, UK Deputy High Commissioner Johnny Baxter reaffirmed Britain's commitment to supporting Nigeria's agricultural growth. This investment will enhance food processing capabilities, create jobs, and strengthen livelihoods, he said. Baxter added that the investment reflects a broader UK commitment to deepen economic partnership with Nigeria by creating jobs, driving industrialization, and helping the country realize its export potential.
Well, that's it. We've also taken that one, and that happens to be the one that is referred to as a newsbit, the way it came your way from us to you. We still have a lot more. We still have a lot more to share with you on the program as we go on. And I did mention that we have a topic, and our topic today happens to be what concerns the economy as well. It should be what concerns the Naira. This time it's supposed to, it said it's the stability of the Naira. So before we discuss what has to do with the stability of the Naira, though I am supposed to be having someone that will be talking with me, and we'll be going on. We'll still go on with or without Habib Gajo this day, and we will be doing a bit discuss. Let me say, we need to look into the things that have to do with the Naira itself and the way it has gone on. There are things that have to do with the reasons for which we have the stability of the Naira at a time like this. I remember that last week the WTO chair talking about Ngozi Okonjo-Iweala had mentioned saying that Nigeria's economy is stable. That is to say that the Naira has become stable, and it's a beautiful thing to hear such a person mention what has to do with the economy and the Naira of Nigeria. Well, we'll look at what has to do with that Naira today, and that's why we will check the stock exchange, because it is from there that we find a lot that has to do with the exchange rate of the Naira and all that put together. So let's look at it and find out what is involved at a time like this before the discussion. On Tuesday, bears persist at the Nigerian exchange NGX as sell-off activities on some bellwethers impacted the overall market. Basically, sell-offs in Lafarge, Africa and Transnational Corporation drove the all-share index lower by 0.7% to 138,734.64 basis points. Equities investor therefore lost 0.67% as the market capitalization settled lower at 87.81 trillion naira. With that, we also know that sequentially the month-to-date and year-to-date returns moderated to negative 1.1% and a positive 34.8% respectively. As measured by market breadth, market sentiment was negative as 46 trickers lost relative to 11 gainers. Bank and ICO Insurance posted the most significant losses of the day, having depreciated in value by 10% respectively, while NCR and Austin and Laz led the gainers after their respective share value appreciated by 10%. On sectors, the insurance industrial goods, the industrial goods, the consumer goods, and the banking indices declined by 2.2%, 1.5%, 1.4% and 0.6%. That's talking about the fact that the insurance declined by 2.2%, industrial goods by 1.5%, consumer goods by 1.4%, and the banking indices also by 0.6%. respectively, while the oil and gas index advanced by 0.1%. And the trading activity was, however, mixed as the number of deals declined to 31,406, in contrast to the previous day's deal of 33,859, while total volume of trades declined by 0.1% to 407.57 million units, and trading value rose by 169.09% to 39.87 billion naira, in contrast to 14.78 billion traded at the beginning of the week. Guarantee Trust Holding Company was the most traded stock by volume at 32.61 million units, while Seplat Energy was the most traded stock by value at 28.45 billion naira. And that is just the way it is, talking about all that has happened. But before we look at the main thing itself, I also want to say there are other things that are also important for us to show you. And so we'll say that something that has to do with that is still showing that stock market story, because it's still within the stock market that we are. So we'll still show you that Nigeria's economic activities continue to expand even in July, as the Composite Purchase Managers Index PMI rose to 52.7 points. Well, we'll still talk about all these things, but now let's see the main story of the stock exchange. Well, so we're talking about the PMI, that is the Purchasing Managers Index. It rose to 52.7 points, up from 52.3 points in June. And the latest figures from the Central Bank of Nigeria, CBN, marks the 8th consecutive month of economic growth, reinforcing optimism about the country's recovery momentum. The PMI is a closely watched indicator that measures the health of the economy by tracking production levels, business activity, and sectoral performance. A reading above 50 points reflects expansion, while a reading below indicates contraction. The July report showed expansion across all three key sectors, namely industry, services, and agriculture. The industry sector recorded 51.1 index points, extending its growth streak to 8 consecutive months. Out of 17 subsectors, 11 registered growth in activities, with transportation equipment leading the expansion. Increased production levels were highlighted as the main driver of growth in the sector. The services sector posted an index of 52.8 points, reflecting the 6th consecutive month of expansion. Of the 14 subsectors covered, 10 recorded growth in activities, supported by a rebound in business demand and rising consumer activity. The agricultural sector maintained its strong performance with 53.9 index points, marking 12 straight months of expansion. All 5 subsectors recorded growth, with farming activities serving as a primary growth engine. However, the sector also registered the widest gap between input and output prices at 8.6 points, underscoring cost pressures faced by farmers. In contrast, the services sector recorded the lowest price gap at 4.8 points. Out of the 36 subsectors surveyed, 26 experienced growth, while 10 reported moderation in activity. Transportation equipment emerged as the fastest growing subsector during the review month, while paper products recorded the sharpest decline. Economic analysts say the July PMI effects it reflects the resilience of Nigeria's economy despite lingering inflationary and cost pressures. The continued expansion suggests that domestic demand remains robust, helping to sustain momentum across industries, services, and agriculture. And I wouldn't fail to say thanks to Chima Mokeji for helping us with this. I'm talking about Chima Mokeji of Tribune, as well as Kehinde Akinshainde Jayoba. Well, that's it. We'll now return to looking at what we would say is the topic of discussion for today, and then we'll be sharing it as it is. Looking at the topic one more time, we'll say that it is the one we refer to as stability of the Naira, and we'll talk about the supporting indices, stability of the Naira. And I mentioned earlier that Ngozi, our dear sister, Professor Mrs. Ngozi Okonjo-Iweala was the one that mentioned recently that the economy is getting stable. Nigeria's money is stable, and so we have to look at that stability of the naira, as it also affects the stability of the economy. And there are certain indices that are referred to as key indices that could be or are or should be the reasons behind the stability of the naira. Kudos to the government in power, of course, for the will and the power to carry out some of the reforms that had happened. But looking at the supporting indices, the foreign exchange reserves is one thing which we have had, of course, our president mentioned time and time again, that it's rising, it's increasing, it's growing, the level is. And so Nigeria's gross external reserves has reached, at a time that these reserves have reached, $41.1 billion. The highest level since December 2021, driven by the rising foreign exchange inflows and a marginal increase in crude oil input. Of course, we did hear our president say that a lot has been achieved. Even before the end of the year, the target has been also met. It's as a result of this particular factor, marginal increase in crude oil input and the growth in the FX, in the NGX. That's it. There's capital importation too. Total capital importation into Nigeria is stood at $5.64 billion. $5.64 billion in the first quarter of 2025. In the first quarter of 2025, it represented 67.12% increase from the first quarter of 2024 and a 10.8% surge from the fourth quarter of 2024, from where we have moved to, of course, the first quarter of 2025. The capital importation, the total cost, the total capital importation into the country rose quite effectively and quite meaningfully. Then there is also the foreign portfolio investment, the FPIs, the foreign portfolio investment. It dominates capital inflows, accounting for 92.2% of the total, with $5.2 billion flowing into the economy. Then we also have seen another of the indices that would have enabled this to happen. That's talking about the banking sector inflows. The banking sector inflows, with big kudos that you go to the governor of the central bank, Cardoso, for doing a great work and ensuring that things have moved the way they ought to, even from that sector. The banking sector recorded the highest inflow with $3.1 billion, representing 55.44% of total capital imported in the first quarter of 2025. So with that, a lot more was put under check, under control, under watch, so that there will not be excesses, there will not be things that will break away from the norm that we have had in the growth, the way it has been from 2024, working towards achieving this goal this year, 2025. There are also other factors, and these are factors that contributed to this stability that we are talking about, the stability of the Naira. There is also the improved FX liquidity. The Central Bank of Nigeria, Nigeria's interventions and increased FX inflows have improved liquidity in the foreign exchange market. With the improved FX liquidity has also on its own affected the stability of the Naira. Structural reforms. There are reforms that will be referred to as structural reforms that were also mentioned that we've seen. And there we have the CBN's market-oriented reforms, and the government's fiscal adjustments have boosted investor confidence and attracted foreign capital. And of course, looking at the last thing that just happened, that is talking about the president's visit to Japan and to Brazil, especially Brazil, a lot more has happened. Looking at, take Brazil for instance, that there is the opening up of the airways for direct air services between Nigeria and Brazil. And this has gone a long way in saving a lot of fund that would have gone out for it. Because before now, the journey would have been what would have happened for 25 hours. But then, at a time like this, and of why it will be for 25 hours is that it will be a journey that will be made through towards the west, towards the other part of Africa. They go to Asia, from Asia, then get to America, to North America, of course. Then from North America, the journey goes down south to South America. But right now, it's a straight journey that has reduced a lot of stress that would normally follow. And as a result, the journey has become a 7-hour journey from Nigeria to Brazil. And we have seen Air Peace do the first journey. And we'll still see a lot more. And there is this bilateral air service agreement, the air services agreement rather, which they have had, and it's already working. So for the fact that it has started working with immediate effect, would also help to increase the flow of foreign exchange into the country, talking about the people coming in from Brazil and coming into Nigeria and all that. And apart from Brazil, other South American countries can also easily make their trip into Nigeria. And don't forget that when we talk about the fact that there is tourism is one major foreign exchange earner for Brazil because of the carnivals that are done, and Brazil's carnivals still remain the most attractive the world over. And this time we know that we also have some carnivals happening in Nigeria. This is September going towards October, November, December, and so towards the end of the year there are carnivals that we get to have and talk about that. The Calabar Carnival, which is a foreign exchange earner for this country and for the state in particular, is also going to enjoy bigger boost, because this time carnival lovers from Brazil will find it quite easy, and from all the South American countries will find it quite easy to come into Nigeria to enjoy and be part of it. We've had some of them come earlier, but then this time they came in trickles, but this time they will come in droves because of the fact that it's quite easy this time to come. Both talking about the financial involvement and the human stress that is involved in the distance journey that has been brought down to something that is smooth and easy for the journey. And we're still talking about the effect and the impact that this will have on the stability of the Naira. So as not much has happened and this is happening, a lot more is coming, and agricultural tourism is also becoming something through which finances can be brought into the country, especially as we'll see a lot of it happening from Brazil and all the other countries around them. That's what we see and know, that there is hope definitely for improvement in the foreign exchange, improvement in the inflows of money even into the country in the exchange market. There is also structural reforms. The central bank's market-oriented reforms and government's fiscal adjustment have boosted investor confidence and attracted foreign exchange capital. It's easier. Our president did say that it's easy now to come to Nigeria and do business and go, and that if we take this to the bank, it means a lot, and it goes a long way to show that there is a lot that can happen. We also have the rising non-oil exports. It's rising. Before now, it was just oil, and the non-oil exports have not risen much. But at a time like this, there is improving non-oil exports and limited opportunities for Naira speculations. They are likely to sustain steady domestic inflows, as it goes on in the non-oil sector. I remember that the president just spoke to ban any exportation of the raw shea product, from where we get the shea butter and all that. If there is a work done on it, on the raw material, and there is up to about 30% refining, so 40% work on it, 30% or 35% of work on it, to ensure that the value is added. It's not just even only in this. I've had a guest here, Enomali Gabriel, with whom we have sat here and talked on several occasions that has to do with when you talk about the non-oil export, and that cashew is one major income we have been losing in this country. One major foreign exchange earner that we have been losing. Talking about the fact that some of these countries, some of the people from China and all, they come into Nigeria, they pack the cashew that has been produced and just go and work on it and bring back to Nigeria all that is supposed to be processed here. We talk about the wax that should be coming out from it. We talk about the honey, not the honey now, but the thing that will serve in place of honey, definitely when you're using at home. It could be the juice. Apart from the juice, even the juice is about the minimum of the things that happen. There is also a lot more that can come from just that one food, that is the cashew. There is the milk as well that comes from it, and a lot. Of course, then the nuts itself also is of a great service that can help in the health of individuals. There are over 100 products that can come from the cashew, just as one. And of course, we do know that the export of cocoa in Nigeria has been on the rise in the past 17 to 18 months. It's been on the rise, and so it's one major income earner again, cocoa products. So not just only doing the raw product exportation, but also trying to work on the refined products so that we could have chocolate bars, even as simple as having chocolate bars. It will help a lot, because up to right now, Nigeria keeps importing chocolate bars from abroad, and that's a lot of money that goes away. And a lot more is done. A lot more is done. And so with the fact that these things can be taken care of, it will help also for us to maintain the quality, the increasing flow of finances into the country. This is just a bit of what we will be talking about as we go on further on the program, because definitely subsequent editions rather, especially on this particular topic of the stability of the Naira. The stability of the Naira. Now there are also other things because when we talk about rising non-oil exports, there are so many of things we have talk about to export and to get to have the finished products coming from here and enabling Nigeria to enjoy all these. Also, even the oil export itself has had a boost on a serious note, because since the coming into play of Dangote Industries, and this has helped a lot because the presence of Dangote Industries has brought so much even into the country. Apart from just the PMS that we see, the AGO and all that, there are other things that are the derivatives from the crude oil that before now were being imported, but right now are no longer being imported. They are being manufactured at the Dangote refinery and being sold in the country. Especially the things that they use, the products they use to produce rubber, to produce all these containers that we have, and all that, propylene, and a lot more of other things that they produce. These are things that have helped the country to get better, talking about the finances of our country. We also have some analysts who had made some expert opinions over a while now. The analysts at Cadros Securities, they predict long-term Naira stability due to rising dollar inflows and increased foreign exchange, foreign reserves rather. And there is also Dr. Aminu Gwadebe, the president of the ABCON. He believes that consistent foreign exchange inflows will ensure the Naira's long-term stability. These are facts that we will see to see more. Then Samiri Gadio, head of Africa Strategy at Standard Chartered PLC, notes that portfolio inflows have been supported by improved confidence amid key structural reforms and better FX marketing functions. These and more are still the things we see and know, and that there is need for us to have long-term stability. Well, I wouldn't fail to say that these and a lot more will still be flowing as we look. And while we were projecting what we have, there is still something that I need to show you before I return here to round off about the program today, and that's talking about the oil market. While the others came, the oil market you didn't see. We will need to show you the oil market. If it's ready, we will need to show you the oil market so that you will see what has happened in the oil market. Though the Brent crude we have from the West Texas Intermediate, and then of course there is also talking about the Brent crude and all. But we'll just take a break. We'll return and show you that. Then we'll conclude what we have for today. Well, you did see the oil market there, and that is just it. Well, with that from the oil market, we'll be thinking of rounding off what we have for ourselves, or for you on the program today, I wouldn't fail to say that we would have also had further talk, but then we'll let it be at this point, as we'll continue with other things we have for today. I want to thank you so much for being part of this and for following us from the very beginning up to this point in time. There are things that we have heard, and cheering news, of course, from the president that the target has been met concerning the expectation on economic terms, really, of the target set by the government itself. And we are looking forward to seeing that since by the end of August it's been so met, that in the last quarter a lot more will come in, and it could be translated into helping to ensure that the nation is made better and that the economy still remains stable as it grows as we go on. I want to thank you for being there for us. Let me also not forget to say special thanks to, but even before everything, I want to also apologize for the fact that the guest that would have been on the program today couldn't make it, but we'll still have been able to deal with some of the factors. We'll still continue to share with others as we go on. Let me say special thanks to Emmanuel Solomon and Sulaiman Hazan for getting me on the way you've seen me here today. And I wouldn't forget also to say that Chidera Obu has done a great work along with Enojo Gabriel and Yani Ukoji. Let me not forget also to say that I've had Habib Okunola, Victor Adeye do the editing of the work we've done, and not forgetting, of course, Divine Dabrila. Thank you so much, Divine. Let me also thank Victor Chizea and Felix Akinjagola for being there to get us up to you the way we have come. And on behalf of my assistant, Esther Abraham, this is Okechukwu Onubogu saying thank you for being part of this. Please, let's do it again some other time.